Have you ever noticed how quickly things change in the world of crypto? One day a coin is booming and the next it's off major exchanges or stuck in legal battles. While some of that is just the nature of volatile markets, there's another reason coins suddenly get hit with problems: the SEC. The US Securities and Exchange Commission has been tightening its grip on the crypto world, and several major tokens are now in serious danger of being labeled as securities. That label changes everything. It can lead to lawsuits, trading restrictions, and even full-on bans from US platforms. This isn't just speculation. In recent years, the SEC has gone after major players like Ripple, Binance, and Coinbase. And in doing so, it's named several well-known coins as possibly violating securities laws. If the SEC officially classifies a coin as a security, then that coin would have to go through a ton of regulation to stay on the market legally. Most won't be able to keep up. So in this video, let's count down 10 coins that are at serious risk of being targeted and possibly banned by the SEC. This isn't about spreading fear. It's about understanding the signs, protecting your investments, and staying informed. 10. Solana. SOL. Solana is fast, efficient, and has a growing ecosystem of apps and games. But it's also been directly mentioned by the SEC in lawsuits as a potential security. In 2023, the SEC named Solana in its filings against both Binance and Coinbase. That's a big deal. The agency claimed that Solana's initial token sales and promotional strategies were similar to those of a traditional investment contract, meaning it might fall under securities law. The Solana Foundation responded by saying they disagree with that classification, and they're working on legal strategies to defend the project. Still, being named at all means the SEC is watching closely. If they move forward with legal action, US exchanges could be forced to delist it entirely. 9. Cardano. ADA. Cardano is often seen as one of the more thoughtful and academic projects in crypto. Created by Charles Hoskinson, one of Ethereum's original co-founders, Cardano focuses on peer-reviewed development and long-term scalability. But that hasn't kept it safe from scrutiny. The SEC also named ADA in its 2023 lawsuits against major exchanges. The argument is similar. The way ADA was originally distributed and marketed might make it a security in the SEC's eyes. The Cardano Foundation has strongly pushed back, stating that ADA is a utility token used for staking and governance, not for speculation. But again, being on that list puts Cardano at risk. 8. Polygon. Matic. Polygon has become a key player in Ethereum scaling. Its network supports fast, cheap transactions and is used by many developers. But the SEC hasn't ignored its rise. In the same 2023 court filings, MATIC was also listed among tokens the agency considers questionable under US law. Polygon Labs reacted quickly by adjusting its strategy. The company has started focusing more on non-US markets, even relocating parts of its business overseas. That's a strong signal. They see the writing on the wall. If Matic ends up classified as a security, it could face major restrictions in the US. 7. Filecoin. FIL. Filecoin is a decentralized storage network that allows people to rent out unused space on their hard drives. It sounds like a practical, useful service, but the SEC isn't convinced. In 2023, the agency asked the Filecoin Foundation to withdraw its registration request and stated that FIL might be an unregistered security. This was a surprise to many in the crypto world, since Filecoin's use case is so different from typical trading tokens. Still, because the project raised money through token sales, the SEC sees it as potentially violating securities rules. If the agency pursues enforcement, FIL could be pulled from US platforms. 6. Internet Computer. ICP. Internet Computer is a bold project from the Definity Foundation that aims to replace centralized internet services with decentralized alternatives. It launched with a lot of hype in 2021, reaching a peak market cap of over $40 billion before crashing back down. The SEC has not officially charged Internet Computer, but there are growing concerns about how its tokens were distributed and the level of control the foundation still has over the protocol. Critics argue that ICP's tokenomics are closer to traditional securities than a decentralized network. If regulators agree, this coin could face serious challenges. 5. Near Protocol NEAR. NER Protocol is another smart contract platform that has gained popularity for its user-friendly development tools and strong performance. But it too might be in trouble. NER was mentioned in discussions around the SEC's broader investigation into staking and token sales. The project had large-scale early funding rounds, and some regulators question whether that makes NER a security. So far, NER hasn't been formally targeted by the SEC. But if they start building a case based on how these tokens were offered to early investors, it's likely NER would be on the list. It's a great project, but that doesn't always protect you from legal risks. 4. Algorand, ALGO. This one's especially ironic. In 2019, SEC Chairman Gary Gensler actually praised Algorand for its technology during a public talk at MIT. Fast forward a few years, and the SEC listed ALGO in its 2023 lawsuit against Bittrex, claiming it was an unregistered security. Algorand is designed for speed and efficiency and is used in several government-level blockchain programs. But that hasn't kept it safe. The main issue is again about how tokens were initially distributed and promoted. If the SEC pushes forward, US users might lose access to ALGO through major platforms. 3. Axie Infinity, AXS. Axie Infinity is known for being the pioneer of play-to-earn gaming. Players earn AXS and SLP tokens by playing the game, which they can then trade or use within the Axie ecosystem. At its peak, Axie had millions of users and billions of dollars flowing through its economy. The SEC hasn't officially named Axis in any lawsuits, but regulators have been looking closely at crypto gaming. If they decide that the tokens used in these ecosystems are investments, not just game items, then Axis could be in serious trouble. The fact that players buy tokens expecting to earn profit could be enough for the SEC to act. 2. The Sandbox, SAND. The Sandbox is a metaverse project where users buy virtual land, create digital assets, and interact in a 3D world. The SAND token powers the whole system. With big brand partnerships and celebrity involvement, the Sandbox has gained massive popularity. But popularity doesn't mean safety. In 2023, the SEC included SAND in its complaints against Binance and Coinbase. Their argument? SAND was marketed in a way that suggested people should expect profits from its future growth. That's a classic red flag under US securities law. If the Sandbox can't prove it's decentralized enough or that SAND is a utility, it might be restricted. 1. XRP, Ripple. No list about SEC trouble would be complete without XRP. The Ripple versus SEC lawsuit is one of the biggest legal battles in crypto history. It started in 2020 and is still ongoing, though there have been some partial rulings. A judge ruled that XRP sales to institutional investors violated securities laws, but sales to regular investors on exchanges did not. This has created a strange situation. XRP is still available in the US in some places, but its legal status remains uncertain. Ripple says XRP is just a utility token for moving money across borders, while the SEC insists it was sold as an investment. Until the case is fully resolved, XRP will remain the most closely watched token when it comes to potential bans. So what does all this mean for the future of these coins? In short, the SEC is building a pattern. They're looking at how coins were first sold, how they're promoted, and whether buyers expect to make a profit based on someone else's work. If a coin checks all those boxes, it's likely to get flagged. And if it's flagged, exchanges might delist it to avoid legal trouble. Some projects will fight back in court, others might adapt their models or even relocate outside the US. But either way, the landscape is changing fast. Investors need to be aware that legal battles, not just market trends, could decide the future of their favorite tokens. If you're holding any of the coins we talked about today, this isn't a reason to panic. It's a reason to stay informed. Laws are still evolving and crypto is still young. The best thing you can do is pay attention, research carefully, and never assume that a popular coin is automatically safe from regulation. Thanks for sticking with me through this breakdown. If you found this helpful, give the video a like and share it with someone who needs to hear this. And don't forget to subscribe so you never miss out on smart updates about crypto, tech, and the markets. We'll see you in the next one.